Hey everyone, and welcome to Stock Talk on October 25th. So we're starting out with the chart of Amazon reported after earnings, and you can see the down move made after market. And for a good portion today, you could say that Amazon was the market. When Amazon was doing well, the markets were leading the charge to the upside, and NASDAQ was leading the charge. Okay? Amazon was representative or was the market today. However, we pointed out in previous videos that earnings this time around doesn't seem to matter even if companies beat earnings. For the most part, great earnings have been sold off, whether it was after market or whether it was the next day or the next 2 days, it started selling off. This scenario here, I'm showing you guys Amazon first, is no different. And you guys can see, here was the hype, right? Here was the hype, and now we're pretty much took out pretty much all the gains that were made today. And I believe Amazon beat earnings, right? So again, no different. This is just the market sentiment right now, given that we're on a downtrend. So be careful as we're moving forward. That is Amazon. This is after market, so we can, of course, let this play out. But this massive drop, taking out all of today's gains, which is almost a 7% loss, or from today, from the end of today, does not bode well for the markets. Keeping in mind, now that earnings are coming through, and it's not working for the markets, keep that in mind, because midterms, when is that? November 6th. Okay, that's still far ways off, like we talked about. Apple's earnings, when is that? That's next week. What happens if Apple earning reports and then Apple starts tumbling? Isn't that another leg? If Apple starts to tumble, that's going to be another leg lower. Keep that mind in the back of everyone's mind. That's on the back of my mind as well. And that's going to, if this continues to play out to the downside, or if we start edging in that down range or push lower, that's going to be on the back of my mind, because Apple's earnings, that's a big portion of the NASDAQ, and got to be very cautious as we move on forward. Here's the S&P 500, and you guys can see that today we were doing almost, a very really unbelievable recovery, and we were retracing a big portion of the move. And at one point, you can see that we were trying to attempt and negate the previous day's candle. Now you can see what's happening, right? We're having a pretty big sell-off at the end of the day. And hence, I've been telling people, of course, I'm not an advisor, but I've been telling people, in this kind of market, you shouldn't chase a trend. What does that mean? If the markets are pushing higher, in my opinion, I'm just waiting on the sidelines, just seeing, okay, it's great, that's pushing higher, but then what's the follow-up, right? What's the follow-up? So, if you have a follow-through, and a significant follow-through, and we can, perhaps seeing some sort of down on the bottom, then we can say, okay, well, we could take a position at this sort of low, but that's just my opinion. So, in my opinion, don't chase a trend. Very dangerous in this case. So here's the S&P 500. And then let's take a look at the yearly chart, because we've talked about that in a moment. Actually, let's see, Google's also reporting, so I haven't taken a look at this chart. Let's take a look at Google, if it's the same fate fell with Google. Similar thing. Can you guys see this? Right? Same fate. Going lower, regardless of how great earnings are. This is, and let's take a look at the yearly SPY chart. Okay. So here's the S&P 500. We are currently trading at, so let's take a look at 268.42. So we're back down over here. So what do we need to do? If this is a bottom, we need to consolidate here, not for 1 day, not for 2 days, but several days upon a time. After this big move down, we need a longer time for the markets to heal itself at a bottom. And, like I keep saying to you guys, when it dips so much, it's not going to rebound and say that's it, and we're going to the upside or fly to the upside in 1 day or even 2 days. That's almost irrational market behavior on a longer time period. That would not be, most of the time, not be the case. So here we have a boxed area from 258 to 261. Keep that in perspective. Everyone's eyes are on that level because it's been the lows of previous months. Now, the thing is, keeping everything in mind that midterms is in, 1.5 weeks. We have Apple earnings coming out next week. Keeping all of that in mind, can the market dip further from this level? And I can tell you that it can dip further. So just be careful in this market condition. And if we see some consolidation patterns over here, right? If we can pull some candles around this vicinity in the next few days, perhaps we can make more of a case of a development of a possible bottoming area. But for now, I'm going to leave it out of the equation until we see signs of that happening first. The thing about this is, I think we're nearing a bottom. Okay, I've been talking about this. I think as we're coming down to this gray box area, and I feel like there's going to be a lot of buying pressure that's going to be pushing us to the upside. Perhaps it will be after all the earnings are done. After every stock has taken a tumble, including Apple, which has held up well under these conditions. After every stock takes a tumble, then it recovers. Perhaps that is the case, and that is a scenario I'm evaluating at the moment. Let's take a look at TVIX. So TVIX did, for the most part today, went lower. At one point was lower 8%. But you can see at the end of day, we started spiking higher, back to $52 and such, right? Because of earnings and it falling and whatnot. So the fear is still there, right? By no means is fear going to dip that quickly from $50 back down because we are in such a high level. So keep that in mind. I think fear is going to be here. And the one thing that was interesting, I thought, was, can you guys see that gray box that I put out? I put that on yesterday, right? Do you guys remember? So let's take you guys to the 10-day, 30-minute chart. Actually, let's take you guys to the yearly chart to tell you why this was a resistance area. Because 54.57 to around 56.63 corresponds to the 200 period moving average, which has acted as a resistance in the past, right? And you guys can imagine that if we're gravitating towards that gray box on SPY, TVIX is going to be gravitating towards $55. Where are we right now? We closed at $49.74. We didn't hit the $55 mark that I was expecting today. So we can certainly edge towards closer to that area as we move on forward. So, I think there's a lot of potential in the markets, but there might be more blood that needs to be shed first in the markets before it will pull higher. Keep that in mind. Okay. Well, let's take a look at a couple of your commodities. Let's start with 4/CL or crude oil. Crude oil's analysis really hasn't changed, and I talked about the major trend should be to the downside, and right now you're seeing crude oil right within this range, trading within this dropped range, and if we form another bear flag pattern that we've done in the past, right, this is likely to push for another leg lower. When will that happen? That could happen if the markets start dropping again in the near future, right? It doesn't have to be tomorrow, but sometime next week, possibly. So if it does start dropping, then crude oil certainly has a bigger potential for it to drop. But right now, short term, sure, it can recover a little bit, but long term should be to the downside. 4/CL for you guys. Thanks, guys. So also, if you enjoy watching these videos, you guys know what to do. Please smash that like button. If you didn't like this video, no problem, no harm, no foul. Hopefully you find it educational or helpful in the future. And if it doesn't, no problem, right? I'm just out there for you guys. You guys can watch all sorts of videos, right? Whether it's on the news, all sorts of educators out there, but at the same time, if you guys can, if I give you guys a perspective, you can weave that perspective, I guess, into your own analysis to make a best decision for yourself, a best trading decision for yourself. And that's really what I'm here for. I'm not telling here telling you, hey, buy this, sell this, right? It's really to aid you and help you, overcome some of the noise in the background, right? At the same time, making your best decisions. Here's /NG or natural gas. I talked about that, how this is a topping pattern. You know, here's natural gas. The question is, you might be asking, well, Kevin, can natural gas continue moving higher just a little bit? It can, but the overall trajectory should be to the downside, right? You know, this is looking like it wants to get pushed to the downside, but it could still very well, you know, make a move higher before it pushes down. So, you know, this is the top of the range. So if you were interested in shorting natural gas, the ticker you would be interested in would be DGAZ, or inverse natural gas, right? So here's inverse natural gas, or DGAZ. You might be looking at this, you're like, well, what is going on here? Well, the thing about this is, if you look at DGAZ, you know, yes, we're nearing a bottom, right? But at the very least, if I'm wrong, if I took a position on this, I could find an area where I would be wrong, stop loss out, and that would be that, right? And that's as simple as that for DGAZ. But if you're right, then what could you do, right? In that case, if you're right, there's certainly potential for this one to make up. So, you know, your risk reward, is that worth it? That's always something that you have to consider, especially going into an ETF like this one. Gold futures. I think some of you guys asked me, hey, Kevin, what do you think about gold now? I think this was a YouTube comment, so thank you for that. So here's gold. We see a resistance, right? This resistance line was back here. All I had to do was stretch it to the right. I don't do anything with these resistance lines. It's kept there for a very long time. If not, you know, if it's valid, it's going to be there for months on end, and this one has been here for quite a while. So here's a resistance line of around 1241. You guys can see that we retested it and got rejected off of that level. Now here's the concerning thing about this pattern, is because, you know, generally when we're looking at Forex SGC, we can be looking at a ticker called JNUG, which generally follows Forex SGC. But what's the big problem between this picture and gold's picture, Forex SGC, or the futures picture? This picture, then this is the actual, you know, this is, you know, perhaps what you're investing in. We went down over 9% today, whereas Forex SGC didn't do much. That's a problem. That's a problem, because that's signaling gold potentially is going to move lower. And when that move occurs, JNUG is going to dip even further. And you guys know from Forex SGC, right? I was looking for a retest of here before I was interested in gold. And I think some of you guys asked me whether I was in gold yesterday. I said no, but you know, I was waiting for a retest. It never happened. And JNUG, while it could have moved higher, you know, this pattern's being played out to the downside. So, you know, be cautious in this one. I think, you know, if the thing about this is, if the US dollar is increasing significantly, as we're seeing again now, that doesn't bode well with the US economy. Just keep that in mind. When it's rising so quickly at a dramatic pace as it had in, I think, the past few months, it's done that. Be careful. And JNUG is just, you know, almost like inverse dollar, right? It's not inverse, it's gold, but like generally, if the US dollar goes higher, gold is going to go lower. So just be on the lookout for that, because that could be a dangerous sign for the markets. Okay, let's take a look at a couple of your comments. So Ant New talked about JNUG. I hope that helped. And then Eric CRM. Hopefully it will go back down. I don't know if it will, but so obviously you can probably see that was a good decision that you left today, as of now at least, and CRM is moving lower. So overall, I think I like this trajectory for CRM. You guys can see that we hit the 200 period moving average before bouncing off of that. But once again, like I tell with other tickers, I'm waiting for the markets to stabilize. So could CRM come back to the 200 period moving average and re-meet that area, you know, and then for the markets to find support and move higher? It can. Yes, it can. So, you know, your area of support should be around the bottoming around 133. That would be the area of support I would be looking for CRM. Good job, Eric. Yarvin, A64750, JC, Giants, Hissen, Bugliarello. Guys, thank you everyone for talking and submitting your comments. I enjoyed reading all of them. I think I hit a like button for all of your comments. So yeah, keep that coming. We'll tackle Rico. Not Rico. I'm sorry. We'll tackle his sins. I'll take a look at one of your ticker, which is REM. So this is an ETF. So right now, what you're seeing right now with this pattern is possibly some consolidation nearing a bottom. So this one is not too bad. Let's take a look at this. Did move higher today. Yeah, so this one is rather slow moving, even though these candlesticks looks, quite large. You can see that this candlestick only represents 0.83%. So if you like to slowly invest your money, sure, this one is a possibly good one to look at. Just note that we are still under the 20 period moving average, but this is attempting to form a bottom. So this could be an area where you could possibly look into. So pretty good. I like this one, and this is an ETF, so just keep that one in mind. Good job. Jason. Yeah, so if you guys didn't check out my live stream, feel free to check out my live stream that was on yesterday, right? It was a pretty exciting time, or, as the markets were dropping, but it was a pretty volatile time. I can't really say exciting, but volatile time for those who were in the markets. Okay, so last one I will tackle is AMD, because we've been talking a lot about AMD, and AMD did move higher today, but we've talked about this, and this shouldn't come as a surprise, as we've been talking about this 20-year monthly chart, which really tells no lies in this case, right? Resistance, and this time the boxed area was $32. Once again, guys, I don't do these lines after the fact. I make it before it occurs, telling people where the resistance areas are, and you can do whatever you want with that information. But once again, a pretty handy sell-off, like I said, isn't going to go down to $1.61. Doesn't have to, but what I told you guys yesterday, and this was straight from yesterday's analysis before AMD's earnings came out, I talked how the potential for $20, $15, or even lower is there for AMD. And you can see from earnings, regardless of if it went well or not, the markets is pushing it lower. So if the technical factor is playing out with the market sentiment, it's going to go down regardless one way or another. You guys saw that with Amazon. You guys saw that with Netflix. You guys can see that with Google over and over again. This is not boding well with the markets. This is not good. This is obviously not healthy. So keep that in mind. In the meantime, thank you everyone for watching this video. I will see you guys on Sunday for the weekend Stock Talk. Obviously, every single day has been an extremely volatile day. I talked about how the S&P 500 or SPY can move several dollars in one day. How many dollars did we move today, right? We moved, this is how many dollars? $4 or $5 at one point, right? So extremely volatile. If you're looking for a possible long position, you have to identify that area of support, in my opinion, right? Have to do that. Don't chase a trend. That's my advice. All right, guys. Thank you, everyone, for watching this video. See you guys during the weekend. Happy trading.